Hey guys, today we come back with another episode about credit card and debit cards. And I think we did one of the episodes
Right.
before about credit cards and how can you use that, credit as a coin and cash as king, or
Right.
that kind of episode that a lot of people liked it.
Yeah.
So that's why we wanted to do another episode on that related aspect, right? Most of you guys probably against credit cards, it depends on it. I would say 50-50. Some people like don't want to get a credit card at all. They never had a credit card.
Mhm.
And some people always use a debit card. Some people don't even use anything, right? Some people always use cash.
Yeah.
So we're going to give you today what are the pros and cons of having credit card and also debit card, and
Yeah.
having both, and when do you use those effectively, make your financial knowledge. Like we just wanted to improve your financial knowledge about those two end of the spectrum, right? So let's jump in and for the credit card, right? We told you guys, like, you have to start building your credit history unless you are a millionaire or billionaire. You have a millionaire parents, you have a lot of cash lying around in under the bed. Right? uh,
Going to bank.
right, yeah. Otherwise you everybody needs a credit history build up. They need to build up the credit history, and you can start from the age 13. As soon as you reach your teenager, right? Your kids become a teenager, or like somebody, just advise them to apply or add a authorized user, right? Their parents could be using like American Express card. You can just add the kid right away, so their credit history will start building right away.
Yeah.
That's how you do it when you're a very young teenager. But I think once you start working, right, 17, 18, you should be able to apply as a student credit card. That's another thing. So this, um, like when you apply for the student credit card, what happens is the same thing. Like it start building credit history, but you won't get the like 10,000, 20,000, $30,000 credit limit. You might get like $300,
Yeah.
$200 credit limit. And if that is not an option, you're not a student, but you are in 16, 17, and you should be able to apply like a secured credit card
Mm.
with the Discover,
Yeah.
even Bank of America, other banks, all the banks does a secured credit card. What you do is basically put $200, $300 your cash into it, and then you basically spend that credit card, whatever you use as a credit card, and then you pay it back right away, and you start building your credit history. That's another way to build a credit history. All this is to start building your credit history. Because if you look at the FICO score that we talked about, five different things, right? Those governs the score, the FICO score, five different things. One of them is a major one, that is the length of the credit history, right? So how long you have that, the average length of credit history. Let's say you started in 13 and you are now 30, right? So 17 years of credit history you have in there, uh, unless you canceled like that card, you opened it, right? Then history's gone.
And the advice that we like to give is don't cancel your oldest credit card because that'll kill your credit history.
That's true. Yeah, right. You just keep on using like the oldest one. Just maybe you use it for 10 cents, 20 cents, even
And
small
and
amount.
actually, I my credit card, just to add something real quick, the secured credit card, because I didn't have a lot of credit built up at the age of 22 when I got here. So I applied for the secured credit card, $500. That's what I got, and I still have that credit card.
Wow.
Yeah, and the credit limit has increased up to only 1,500, but I still have it because if I lose it, if I cancel it, then I would lose 13 years, 13 years of credit history. So never ever. It doesn't matter whether it's 500 or 10,000. Keep your oldest credit card.
Yeah, that's a good advice.
Yeah.
So yeah, I do have like 52 credit cards. Like I think I mentioned you guys before. and
Yeah.
I have all different banks. So what happens is it actually counterintuitive. Like if you think about, like you get credit cards and then you start using it,
Mhm.
but you pay it off, right? You are managing, like I'm managing 52 credit cards. That's the big thing for the financial institution when they look for my credit history, right? Oh, you have lots of different varieties of credit card credit in your. That's another advantage. Like it's going to increase your
Yeah.
score. So don't
Because
think that.
I think what happens there is when get right, someone might think, oh my God, 52 credit cards, is it even advisable? But I think what you're trying to say is when you have 52 credit cards, you have a lot of credit history and also you have a lot of credit limit, right?
Right, right.
As long as you keep it down to, I mean, the usage is good. If your usage is good, like less than 40, 50,
30% is
30%,
normal, but sometimes they say even 15%. So to be
let's say
more
30%.
conservative.
Right? If you have 52 credit cards and if you've been making payments on time and if you're keeping the minimum use like 30% usage, and then that means imagine 52 credit cards, a credit limit that you can have.
Right. That's
Yes, like I guess 52 credit cards, I would say like 50 to 75,000 or even more. And if you have been using only 30% of it, imagine the available credit limit, and then the creditors will see that. Oh my God, he's got this much of credit limit, and he has used only up to this point. That means he's a good handler, like he's managing his credit well. So that's the advice that you want to give, right?
right, right, exactly. That's called a debt to income ratio. Like think
Yep.
about, like you have a total 100,000 credit, right? For all the credit card combined, let's say 100,000,
Right.
and you are only using $2,000 couple of credit cards, let's say. So you're doing 2%. Your debt to income ratio is 2%.
Right.
Uh, that's actually really good, and so that's why the more you have is better. But
Yep.
you shouldn't be like
Yeah.
exploiting that, right?
Right.
And it's actually going to improve your credit score. That is the main goal here, not to brag about all the credit cards to others, or just
Yeah.
to have like lots of credit under your, wherever you go, you just
Yeah.
toss up the credit card and buy all this stuff. Not, not for that, just
And,
for getting a score high.
exactly. And the thing is, credit cards, it can either make or break you. So you
Right.
have to make sure that you have the discipline, like you. Like you have 52 credit cards, right? And one of the episodes you shared your credit scores. I mean, that's like brilliant credit
Right,
score.
yeah, 800
And
plus, right?
yeah, that's fantastic. With someone who has 52 credit cards. So you have to have the self discipline, of course, because you can it can either make or break you. So make sure that you keep your oldest credit card and make your payments on time, and make sure at any given point you use only up to maximum 30% of your total credit limit.
Right, right. Yeah, that's right. And another thing is, like you can call them up and ask them to increase the credit limit.
Yeah.
Let's say you have $5,000 in one, and you can call them up and say you change your job or you got promoted, you want it for 8,000, right, instead of 5,000. What happens is, like you could actually spend more, a little bit more. The 30% will get increased. So that's how every year you should do it. Like just call them up and just increase. Some of them you can go online and just do it online. It's pretty instant, right away. That's another thing you can do. And like I said, right, the main factor is improve your credit history, credit scores. And why do you do that? Because we are looking for financial independence, right? We always wanted to use that money from other people, like banks,
Sure.
right? We don't use our own money to become rich. That is the mantra you guys should know about. How to become rich is basically use other people money wisely. Take advantage of every loan that you can get, and then leverage that to within your financial channels that you're doing, right? For example, getting a loan for your business, so you need your credit history built up, and you can put only like 10%, 20%, but you can get the 80% from banks, right? Get that, and reproduce a lot of different things, and then that's going to grow into maybe like 200% in one year. Then you can pay it off. So leveraging your credit history wisely will make you rich really quick. That's a credit card part, right? Anything else you want to add, Randy?
Yes, Venkat. So what I have learned, what I have heard, and what I've seen was most of the successful people who are uh, I mean personally that there are successful people that I personally know. Also, what they do is they use their credit card instead of the debit card for their grocery, like monthly expenses. All right. So monthly expenses, let's say it's only $1,000, right? And they keep it. So they one advantage of that is, and at the end of the month, when they get paid, like their payroll, they paid in full. All right. So what happens there is one advantage is your monthly expenses. When you have the debit card, you just use it anywhere you go. You don't remember, you don't keep a track of it, so you lose track of your total expenses, monthly expenses. And the other thing is, when you do the credit card thing at the month end, you're paying it back, so you know exactly what your expenses are. So you can keep, like we talked about budgeting too, right? So
Right.
that's an advantage. You can keep a track of that, and at the same time, you're paying it in full, so it increases your credit worthiness, and you're paying on time. That adds up to your credit score. So that's one advantage. And the other one is, especially when you go when you swipe your card at the gas station or at a grocery store, there's always a risk of being scammed. Okay,
Mm-hmm.
and if you use your debit card and got
No
scammed, then you're
protection.
losing your money.
Right.
All right, and it's really hard to recover that money. And let's say you even recover, you might be able to recover it, but you're losing your hard-earned money. But if you got scammed by swiping a credit card, it's not your money. It's
And you
and
have
you
protection too,
protect
on
that.
top of
That's
that.
exactly
Yeah.
what I was going to say. So you have
Right.
protection there. So that's another advantage of using the credit card. So just wanted to add my 2 cents in there.
Oh yeah, that's a great point. I forgot to mention that, and I think we can keep on going about credit card like whole day.
Yeah,
There's a whole lot of benefits. Like there is a points you can get.
yeah.
Sometimes like 2 points, double points, 3 points. Like Costco card gives you like almost several $100
We
a
talked about
year.
all that in a separate episode,
Right,
right?
right. Yeah, we did that.
Yeah,
So in this episode is just comparing the credit card versus debit card. So you should get, like, if you wanted to have, financially rich life and financial independence, you should leverage the credit card.
yeah,
And the debit card comes easily. Debit card, you don't need any kind of requirements. You put some money into the
yeah,
bank and then you open checking account or a savings account, you get the debit card.
yeah.
That's automatic. And I never use a debit card. So don't use it unless it's needed, unless in the ATM or something like that. I never use the debit card. Just make use of credit card. We would advise on that highly. That's what going to give you all the benefits that we always talk about.
Yeah, absolutely. So you make sure you have your self discipline, and you'll be good.
Right. Yeah, definitely. Thank you guys for your time today, and come back and visit us and subscribe to our channel.